Hey traders, welcome to Charts and Coffee. Great to see everyone. Happy Wednesday. Hope everyone's doing well, or at least better than I am. A little under the weather here, but all is good. And we're going to take a look at what we have coming up today in terms of hot zones. What kind of open are we going to get? And really any questions that you all might have for me. So as always, feel free to type them in and we will take a look. What do we have on tap for today, October 26th? Not a lot in terms of high impact US data, but a lot of trickling in of different data. Good trades balance, preliminary wholesale, new home sales, crude oil inventories. So kind of a low heat, hot zone kind of day. But that doesn't mean that these data points may not necessarily move the market. Come on in, girl. Keep going. The pup's going to join us for the morning or not. All right. So that's what we've got coming up. Now, remember, the reason that we spend some time looking at the economic calendar, what kind of speaking events in terms of Federal Reserve members might be speaking somewhere, as well as earnings. What kind of earnings events are we expecting after the bell? And that's where we really have to focus on the three different calendars. So my favorite for earnings is Estimize. Whatever your favorite may be, please have it in such a way that you can know the earnings releases 4 weeks out, 6 weeks out, not what's coming up this week, not what's right around the bend. And this way you can take advantage of sometimes the ramp up or all the movement before earnings, which oftentimes are actually better setups than actually trading the volatility of the release. Okay. So we got that out of the way. All right. As always, let's just jump into those questions. That's what's on my mind this morning. And first up. All right. Alex, good morning. Following up on my comment yesterday about the hourly price movement ranges, sure. If I see all three graph colors, so red, blue, and green, in a 30-minute window on a 5-minute, you avoid day trading. Oh, okay, cool. So what you're doing is you're navigating around an environment that you have found is lower probability, higher unpredictability. So love it. Tops tools are awesome. Thanks again. My pleasure. And thank you so much, Alex. Now, tops are the foundation, right? As you know, on top of tops, which is the engine block, right? On top of tops, we put HPMRs. We can put V-score. We can put these other tools to give us that multi-dimension look at the market. So love it, Alex. I appreciate that. And thank you for putting in the effort, putting in the work, right? I can hand the tools over to folks, but at the end of the day, it's you all that are putting in the effort. All right, Bot says I sound terrible. Really, Bot? I'm trying to sound as unterrible as possible. The only thing that's a new thing this morning is my eyes are watering now. So good times. I was joking with my husband. He said, "Are you going to trade this morning?" I said, "Yeah." I said, "I didn't feel well Monday either. And we went 4 for 4. So the tools are good enough. I can't screw it up even with a fever." All right. So next up, Dale, good morning. Do I have the replay link from last night's presentation? I don't. Dale, I finished up that webinar and went straight to bed. I'm sure for those of you that registered, it will be sent out. We'll get that out to you. I don't have it. Maybe the bot does, and she'll send it through. But I don't have it. All right. But thank you for asking. It's not ready yet. Okay. So Dale, look for it today, later on today. It's not ready yet. All right, cool. Next question. Prince asks, I'm slightly confused about breach retreat. I've seen long triggered, even though I didn't see a break through the higher low of the clearing range. I've seen the same in the free video. So Prince, take a look. Well, let me see if I've got it here. Let me show you what you can check on that. Let's see if I have the clearing range tool. Okay. Regardless of what clearing range tool you're using, there are premium versions and there are free versions that we give to members in the futures room and actually all the rooms here at Simpler. So what I would say is look at the number of ticks. You see that there? Excuse me. take a look at the number of ticks. Where's my drawing tool? All right. Bear with me here. Let's get this up and running. Here we go. See this right here? How many ticks do you have? Now, it should not be zero. That do not have it at zero. It shouldn't be zero. It might be defaulted at one or two. Either is good. You see here that I like to use two, which means I've got to trade through the high or the low of the opening range by 2 ticks. So that would be a half a point in the S&P. That would be a half a point in the NAS. That would be 2 points in the Dow. That would be 2/10 in the Russell. That would be 2 pennies in stocks. So how many ticks is that? And that should give you some clarity as to why it is breaching. The other thing that will happen from time to time is if the breach happens right at 10 o'clock. And sometimes because of that timing from one candle to the next, it can do strange things sometimes. But here's the cool thing. There's nothing about the breach retreat, frankly, that's proprietary or isn't something that we can do manually. So when you know what the high-low range is between 9:30 and 10 o'clock, we break above that level, you know it's a breach. So the tool is there for some simplicity and some automation. But as long as you are aware of how many ticks, higher or lower, through that range we are, then you'll know why that alert turns on or off. And I'll usually toggle between 1 and 2, but I prefer 2. All right. Hey there, Pam. I appreciate that. Yeah, I probably sound worse than I feel. No, I feel pretty awful too. But, here's the cool thing about trading essentially from home. I'm going to day trade for about an hour. I've noticed I've got a good hour's worth of energy before I need to go lay down. My tools automate everything for me. I've got a pattern and a process. And so what better way? Yeah, what better way to just put these things to work than say, hey, if I can trade with a flu or whatever I've got, and if you're feeling well, imagine how well you can trade. Thank you, though. Thank you, everybody. I must sound awful, shouldn't I? All right. Gang, I love trading. I love doing this. It's hard to get me to stop. I get to do what I love and talk to people who love doing it too. I have a really hard time stopping doing this because it's a great life. All right, Euro. Hey there, Nova. Euro. So if we take a look at the 6E, remember the 6E and the US dollar are going to have an inverse relationship. And if there are expectations that yields are through climbing, that we might see the Treasury buy older bonds, recycle, I think was Janet Yellen's word. And if we're going to see the dollar sink because of lower yields, which is oftentimes the reaction. Oh, gotta sneeze. All right. If we're going to see that, then we know that the euro could strengthen in light of that. So when we look at the euro right now, do I want to buy it? I'm not there yet. No, well, you know what? Let me show you something that I taught you all last night. Take a peek at, this is the daily time frame of the 6E. I made the V score really big. So the first thing a lot of you are going to notice is, Rog, we're at least neutral in the trend right now. Okay. Number one. Number two, where is the resistance on the V score? And it's just in front of the -1 standard deviation. Okay, cool. Let me look how long you've been stuck below that level. I can't buy it yet. Now, as much as that could be resistance and a reason to short into that ceiling, if we break higher through it, then we can start to see what kind of potential setups we have. But right now, I will remain bearish. It's not a buy for me yet. Not on the daily. Now, intraday, depending upon the structure of the market, we could have HPMR buys. We could have Darvis, V-score, oversold stochastics. We can have all sorts of buys. Intraday, we'll just take that as it comes. But on the end of day chart, I'm still a bear. So thank you for the question. All right, next up is, let's see. Can I explain the GDP? It's just so I keep things really simple. Nietzsche, I'm not an expert on macro, but what I am an expert in is the rate of change of anything. Rate of change of price, rate of change of sentiment, momentum, trends. What is rate of change? It's just a fancy way of saying, is there a trend? And then which way is the trend going? All I want to know, let's do this here. All I want to know is what is the rate of change of that data? Is the trend going higher or lower? So here's your 830 growth rate, durable goods, price index. Pick whichever one you want, even jobless claims. And you can pull up a chart. You can do this on trading economics. You can do this on Forex Factory and just look at the trend. If there even is one, look at the trend. And remember that GDP, Nietzsche, is probably the least important it's ever been. And the reason I say that is somewhere along the line, we redefined what a recession is. Because back in 2020, we would have called this a recession. And we did. It was quick, right? Why isn't this a recession? I know it's not as dramatic, clearly, in terms of what was happening. But why would we call this a recession? Because we've just arbitrarily decided that this isn't a recession. So if we have redefined what GDP, two sequential quarters of negative GDP growth, if we redefine what recession is, to me, recession is not even a conversation that I'm going to put a lot of credibility in, because the measuring stick is whoosh, thrown out the window. So now it's just an arbitrary opinion. When we take the process out of any definition, when we change the meaning of the word, we don't know what to think. So I think GDP means the least that it's ever meant. And this would have been a recession, but we're saying it's not. I am not ever really that concerned about the word recession. As a trader, I know that in terms of the economy that we live in right now, very different. But as a trader, right, and I've got to separate Raghee, who runs a house, and Raghee, like all of us who pay bills and run a business. That's a different Raghee. The Raghee that looks at these charts looking for opportunity, that's a different Raghee. That Raghee looks at recession and says, by the time that we call something a recession, because we need two sequential negative GDP prints, by the time we get to the third, we're usually, not always, we're usually coming out of the recession. So it's always an extremely backwards looking conversation. And that's why I just don't give it a lot of weight, not compared to CPI and jobs. And I think if we were to look at the hierarchy of the pillars of macro right now, inflation, of course, jobs, and then distant third, the GDP. So I hope that gives you some, bearing. All right. Okay. Next up is, thank you all. I appreciate the well wishes. Yeah. And I don't even like to be on, forget camera or mic when I don't sound great, but I think there could be some good trades this morning. And if you're in the mastery, we'll trade the first hour and then we'll do our second session in the afternoon. I sent out the alert. We'll split up the session because I don't think I can stay upright for 2 hours to do this session. And I don't want to make sloppy trades. So we'll keep that focus on the first hour after the bell. All right. Let's see. Next up. Hey there, Alan. Now that I've been following you over the past few weeks. Oh, thank you. Thank you for putting in the time. I can't stop trading. It's in my blood now. Love it. Love it. It's not in everybody's blood. This is for sure. Still learning to understand what a breach retreat is. All right. Step 1, the bell rings. Step 2, we're going to start to put in highs and lows, a range between 9:30 a.m. and 10 a.m. Eastern. You look at the high and the low that was established in the first 30 minutes of the morning. What is that range? What's the high number? What's the low number? A breach, just like a whale breaching the surface of the water, a breach is breaking through one of those levels, not both. A breach is breaking through the high or breaking through the low of that 30-minute high-low range. A retreat could be considered more of a retracement, but breach, retreat kind of has that similar sound. It's not alliteration, but something like that. And I just like it. But it really is a retracement. A retreat is synonymous with a retracement. So once we breach, I'm looking for a particular percentage. It's a Fibonacci retracement in order to get long after a breach higher, or short after the breach lower and that retracement. So the retreat is the retracement that I want to capitalize on after we break the range. And that's it. It's a really old-fashioned setup that dates back to the way in which back in the floor days of the S&P and the full-size contract, the way ranges would be established on the floor during the first 20 to 30 minutes of the morning. So it's really old school, and I do love it. It's not the only pitch that I look for. We have HPMRs and B scores and other things, but it's a classic one. It's a classic one. All right, what are my thoughts on the dollar Canada? I'm going to pull up the 6C, and it's got, for now, it's still a short. It's still a short. Bernadette, it's still a short. 7,400 on 6C, and that would correspond with, on the spot market, the 135 handle. Yeah, that's what I would look at. And then why is it inverse? For those of you wondering, why is it a buy on the dollar Canada and a short on the 6C? It's the order in which the currencies are quoted in each. So in the futures, it's Canadian dollar versus US dollar. In the Forex, the spot market, it's US dollar versus Canadian dollar. So they look inverse to one another because the order in which they're being quoted is different. This is being quoted in dollars. Whatever the first currency is, this is being quoted in dollars. In the 6C, it's really focused on the loonie, the Canadian dollar, the loonie. So I hope that makes sense. And yeah, that's what I would look at. Great question. I think it's looking more like a short from a conservative level than it has in a while. But remember, gang, if we are seeing the sentiment slowly, and I say if, gang, I'm not here to say this is what the markets are going to do. I tweeted on my Twitter account just the other day, and it's kind of, I meant to be funny, but not, right? Here it is. Fun fact. I don't know where price is going to go next, and I'm not going to pretend like I do. We play probabilities, right? The thing that we want to consider in terms of the probabilities of where the US dollar versus Canadian dollar can go next is going to be twofold. What's next for crude oil? Stronger crude oil will help strengthen the Canadian dollar. And what's next for the US dollar? Do we really have a less hawkish sentiment making its way through the market? Hence, it would strengthen euro and weaken dollar. So we're in an interesting state of flux here. So keep that in mind. All right, next up. How are we doing on time? All right, we're good. How do you predict or estimate if a gap will close or keep going? So Gurmeet, cool question. It's always a setup. So predicting, I cannot see the future. I wish I could sometimes. Maybe we don't want to know. What I'll always do is look at the first 5 minutes after the bell. Some traders will look at the first 1 or 3 minutes. I use that longer range. And I'm going to look to see really a breach. Is there a breach of the range after the bell rings within the first 3 to 5 minutes? That's probably the most popular. Again, I used 5. So if we're going to close a gap, we gap open, up or down, whatever it may be. And then I look at the way price action behaves between 9:30 and 9:35 Eastern. If we're going to close the gap, that's going to be the direction of the breach. And that's how I measure it. Is there any way to guarantee a breach close? Do breaches have to close that day? No and no. Breaches do not have to close, or I should say gaps, do not have to close the same day. Sometimes they will. And then they will move in that direction once we take out that 5-minute range. So that's the way I'll look at it. I'll look at a 5-minute high-low range. All right. Siba says, take it one for the team. I'll tell you what, my friend, I hope I'm pronouncing your name right, Siba. I get to wake up, pull some money out of thin air for the market possibly, and then go to bed. I don't know. I'm not feeling well, but that's a pretty darn good life to me. What did you do today? Well, I got to talk to a bunch of people. I love the market. Then I'm going to go trade for about an hour, make some money, make some more. I'm drinking some tea today. Yes, I have to confess, this is not charts and coffee this morning. It's charts and tea. Make a little bit more tea and rest. hard to complain, right? It's really hard to complain. So again, thank you all. Thank you all for being a part of our Caffeinate and Dominate crew. And I will see you tomorrow. Be good to each other.